So there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today I am joined with Pankaj Mathpal, MD, Optimum Money Managers, and also do not forget to send across your questions on our WhatsApp number, which is 8657974571. You can also email us your questions on the Money Show at etnow.tv. Good evening, Pankaj, and welcome to the show. And let's take Rishita's question first. And so she says that she's 27 years old and she wants to invest 4,000 rupees in mutual funds, and that will be for 20 years. And she wants to know the fund mix that's right for her. So congratulations, Rishita. At a very early age, you're beginning your investment journey, and if you are not well versed with the equity market, mutual funds definitely is the right way to start this journey. But then 4,000 rupees, and what kind of funds would you recommend? Pankaj, also assuming that she's going to be a long-term investor in equity.
Kavita, good evening. Rightly said that she is a long-term investor and she should have investment across the market caps and her portfolio should be diversified. But at this point of time, I'll not suggest her to invest directly in small cap because she's a new investor. So what I'm suggesting, she should start with multi-cap fund. So one scheme can be multi-cap. So through multi-cap, she will have allocation in large cap, mid cap, and small cap. At the same time, one scheme can be large and mid cap fund. So two schemes, one is multi cap, so 2000 in both the schemes.
All right, so this is what you've recommended her, a multi-cap and a large and mid-cap. Why not a flexi-cap? I mean, just out of curiosity, I wanted to know.
See, if you see the flexi cap funds, mostly they have allocation large cap only. Now, the objective is she should have across the market cap. So for multi cap, there's a guarantee that she will have investment every time, at least because 25% of the scheme's portfolio has to be allocated in each market segment. So through this fund, she will have investment in small cap also. In flexi cap, there is no guarantee that in every market cap allocation will be there. That is one reason. Second thing, because I do not want her to take higher exposure in small cap. That is why through large and mid cap, I have suggested allocation in large and mid cap. So through these two funds, she will have more allocation in large cap, more in mid cap, but lesser in small cap. So that was the reason. That's it.
This is what is recommended to you, and also keep in mind that it's good that you are beginning your investment journey, and you've asked for certain names also as far as having the right funds in your portfolio is concerned. But then do remember to have financially planned portfolio in terms of aligning your goals with your portfolio. Only then you can move ahead in your financial portfolio journey or investment journey when you are really aligned to your financial goals, and then you can analyze as to what kind of asset class, what kind of investment instrument is right for you. So do that, and if in case you have more queries, you can send across your questions. I will move on, and let me take Raghupati's question. We are trying to get in touch with Raghupati, but then for some reason not able to get through the number. Pankaj, you also have the question. So he wants to know if he can transfer the PPF amount to an aggressive hybrid fund for the regular expenses that he has, and he just wants it to be taken care of. So, it's moving from debt asset class to an equity asset class. Hybrid also has a certain level of debt in it, no doubt about that, but then out and out debt and an equity and debt. To have a regular income from your financial portfolio, ideally what should be the strategy? Should you be going from equity to debt, or coming from out and out conservative investment instrument to a hybrid instrument which also involves equity? And even if it is hybrid, should it be a conservative hybrid? Because hybrid, again, you might want to explain, have different kind of risk and classes to it.
Exactly. See, any scheme which has allocation in more than one asset class is a hybrid fund. But if you talk about the conservative hybrid, it means the equity allocation will be between 10% to 25% of the total asset of that scheme. If you are talking about aggressive hybrid, it means the minimum when this Raghupati is mentioning about this aggressive hybrid, it means he wants to move from PPF to scheme where there is a higher allocation of equity. So there are two things. One, whether one should switch from debt to equity or debt to such aggressive habit. Second thing, specifically from the PPF, because PPF is a debt instrument, but it comes with the different features. For example, it has guaranteed returns, government guarantee on this, and on top of that, returns are tax free. So, in my opinion, it is not a good idea to switch the full amount, the total amount from PPF to aggressive hybrid. Yes, for the diversification, he can plan something that half the money can be in PPF and half of the money can be switched to the aggressive hybrid or other hybrid funds. For example, balance advantage fund or conservative hybrid fund. So he has to decide that what kind of risk he can take. And so he has said that he does not want the regular income out of this, but still, considering his risk appetite, he can decide, but not the full amount. Half of the amount or some part of the amount can be switched from that PPF to hybrid funds.
We don't have Raghupati on the phone line because I'm sure he might want to get more clarity if at all that's needed, but hopefully we've got his query sorted. I will take a quick break, but then post that we have more viewers joining in to ask their questions to Pankaj. And just in case you're watching our show live and you also want us to do your life financial planning, you can do that on our WhatsApp number and email ID. And do send us your complete financial portfolio details, which might have mutual funds and maybe insurance policies also that you might have bought, you know, looking at the investments portfolio that you might have made for yourself. So send across your questions in detail and we will present that question to our guest so that we can do your financial planning. So a quick break and post that more viewer queries. Welcome back. You're watching The Money Show with me, Kavita Thaplayal, and we were answering our viewer queries. With me is Pankaj Mathpal. Pankaj, let's move on and let's take Debushmita's question. And she says that she has a lump sum of 20 lakhs to invest for a period of 10 years. And she also wants to invest in debt and arbitrage fund as she's already invested in equity funds via SIP. And she wants to know if arbitrage and debt funds are the right way to go about it. So, I mean, the period is actually for 10 years. She has a good amount of period even to take risk in equity. But if you're already, you have an exposure to equity, would it make sense to get into a debt and arbitrage category for such a long time?
Kavita, though I agree with you that for 10 years investment horizon, one can consider investing in 1 year or something lesser than that, then it is good. But for 10 years, I will definitely suggest her not to invest in arbitrage funds. But if she wants to diversify her portfolio between equity and debt, so for long term, she can consider the long duration funds, means gilt fund or corporate bonds, or the category called long duration, or banking and PSU debt funds. So, because in debt category also there are 16 subcategories. So, there are some categories which have a long holding period of the underlying assets. So, in this, I can recommend her some schemes like ICICI Prudential Corporate Bond Fund, Aditya Birla Sun Life Corporate Bond Fund, then HDFC Banking and PSU Debt Fund, and SBI Magnum Gilt Fund. Again, I'll repeat, if she wants to invest in debt only strictly, these schemes can be considered. But after listening to this advice, if still she wants to invest in aggressive hybrid or equity funds, in my opinion, for 10 years, that will be a better decision.
All right, so we clearly don't have Debushmita on the phone. Otherwise, she could have inquired more about this particular question if at all she needed some more clarity. But then let's move on. Pankaj, I have our viewer online with us, Gaurav. Gaurav, hi, good evening. How are you doing today?
Good evening, ma'am. I'm fine. How are you doing?
I'm doing good. Thank you so much. And thank you so much for sending across your question as well. Although I do have your fund details, your portfolio details, we have Pankaj Mathpal today as an expert. So I just wanted to know that would you be willing to increase your investment amount as well?
Yes, right now, ma'am, I'm almost saving my 60% of the income,
Right,
and
right.
I still have the potential to go little more aggressive on the savings part. However, it would be great if you can tell me if I can reshuffle my current saving within the portfolio
Sure.
so that I can achieve my target mentioned on the.
All right. And are you loan free as well?
I would be loan free in next 6 to 8 months based on the
Oh, lovely.
EMI that I'm making. Yeah.
Oh, lovely. That is so nice to know. I mean, you can also add up that amount, as far as your investments are concerned. So that's good. And thank you so much. You've done a very elaborate planning, and meticulously you've marked down yours and your wife's portfolio. So let's move on to your financial planning part. And Pankaj, what's the first aspect that you might want to start off with?
See, first thing, because Gaurav has investment across stocks, mutual funds, properties are there, as well as fixed deposits. But that second thing, because property, we know that it does not really means give that kind of return what is expected. If you want in a short period, you want to achieve a big amount. So if, as you mentioned, that after a few years you will be debt free. If you want to exit from the real estate and want to increase your investment in equity, that will also be a better idea. And see, if I do a calculation for your fixed deposit, RD, your real estate, for example, real estate I consider 10%, fixed deposit and RD at 7%, and equity at 12%. So around 22 to 25 crore rupees can be accumulated in 10 years. But as your target is bigger than this, you should definitely consider increasing your investment amount. And within the equity, some changes can be definitely means you can consider as like you have access focus fund. So this fund has not been performing well for quite a long time. So I suggest that you can exit from this scheme and invest in another taxi cap fund. That will be a better idea. Or for example, SBI consumption opportunity fund. Again, it's a thematic fund. So if you understand that this consumption theme will do better than the broader market, you can stay invested for some time. But in my opinion, at this point of time, technology, healthcare, manufacturing, these looks better themes. So you can consider those themes. There can be some, you can think about that change. And apart from that, you have good allocation. You can stay invested in these funds. Out to reinvestment or reinvestment to payout, then it is within the scheme you are switching, but growth to IDCW or IDCW to growth, it will attract tax because it is like a redeeming one and buying another scheme. So IDCW, when I mention, it is as good as the dividend which was known earlier. So Kavita, can I take another question as well? In this, he asked another question.
Yeah, please, please, please.
Yeah. So about this stamp duty, government collects 0.005% of the purchase amount, whether you purchase in lump sum or you invest through SIP. So when I say 0.005%, it means 5 rupees on 1 lakh investment, or on 1,000 rupees, it is 5 paisa. And you cannot avoid it because government is collecting on the purchase of units of mutual funds. So you have to bear with this.
All right, I think with that it will be all today, and thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. And it's a wrap on the Money Show as well, but then I'm going to leave our viewers with our WhatsApp number and email ID, where we keep waiting for your questions so that we can do your live financial planning with our guest on the show. Thank you so much for watching. Goodbye.